Welcome back to Smart NYSE Investing. In the previous video, we discussed how the stock market actually works. In today's video, we will take this one step further and discuss some of the lucrative stocks listed on the NYSE, supported by real numbers and current market conditions. The goal is to help understand where opportunities may exist right now, especially considering the ongoing geopolitical tensions and war-related developments. Now, one important thing to understand is that war does not impact all stocks equally. Some sectors like travel and luxury usually suffer, but at the same time, some sectors actually benefit. These include defense, energy, and certain technology segments. Some, instead of looking at the entire market, smart investors focus on where capital is flowing during such situations. Let's start with the most important sector right now, defense. Take Lockheed Martin as an example. If we look at the numbers, this stock was trading roughly in the range of $400 to $450 in early 2024. As geopolitical tensions increased, the stock moved up significantly and recently traded at around $660 to $680, even touching levels close to $690. That is nearly a 40 to 60% increase depending on the entry point. Now, this is not a random. This growth is backed by real demand, missile systems, fighter jets, and defense contracts. Similarly, Northrop Grumman has shown strong movement and even jumped around 6% in a single day after escalation news. Another example is RTX Corporation, which gained close to 5% immediately after conflict-related developments. And companies like L3Harris Technologies also saw gains of around 3% to 4% in short periods. So what does this tell us? It shows that defense stocks are directly linked to government spending and military demand, which increases during war. However, one important point, these stocks do not go up in a straight line. There will always be short-term corrections due to profit taking. Now let's talk about the second major sector, energy. Companies like ExxonMobil and Chevron tend to benefit when oil prices rise. During war, especially in regions connected to oil supply, there is always a risk of disruption. This uncertainty pushes oil prices higher, and when oil prices go up, the profitability of energy companies improves. That is why energy stocks often perform well during geopolitical tensions. In addition, these companies usually offer strong cash flows and dividends, which makes them attractive even in volatile markets. Now, the key question is there still opportunity left? If we look at the data, many defense stocks have already gained 30% to 60% from earlier levels. However, this is not just a short-term event. The current situation suggests continued global tensions, increasing defense budgets, long-term military contracts. So realistically, in the short term, stocks may remain volatile. In the medium term, there could be 10 to 25% upside. In the long term, these companies provide steady growth with dividends. Now, if someone is considering investing in the current situation, the approach is very important. Instead of investing everything at once, it is better to invest gradually in phases, focus on fundamentally strong companies, diversify across defense and energy. At the same time, it is better to avoid sectors like airlines, luxury, and highly speculative stocks during uncertain periods. This content is provided for educational purposes only. It is not financial advice or a recommendation to buy or sell any stock. Stock markets involve risk, especially during geopolitical events, and prices can be highly volatile. You should always conduct your own research while making any investment. Understanding numbers, trends, and sector movement is essential when investing in the NYSE, especially during uncertain times. In the next video, we will cover a step-by-step guide on how beginners can start investing. Thank you.